All right, so we're back. The last question now for you for performance. Now, we're going on to the balance sheet question now. And this should be pretty easy. It was worth 10 marks, and the TPN was worth 15 marks. So we're going to run through this quickly. All right, so we looked at this before. We looked at the trial balance. We did that already, and we made the connection with trial balance and the financial statements. We did the TPN account, and we're going to do now the balance sheet. But and this is the question. Quickly, let us remember exactly what goes in the balance sheet: assets, liabilities, and capital. Right? Remember, you can always screenshot the information here and go through what is needed. So balance sheet, assets, liabilities, and capital, and there are different types, and we have to do the different types in a particular order. Always remember, we use as best as possible. We try to make sure we use the order of prominence. So just for your perusal, so the order, we have the fixed assets, then we go on to the current assets, current liabilities. The reason I placed the long-term liabilities there with a star and in brackets is in this question, you did not get a long-term liability, but it can go two places. It can go below the current liabilities, or if it's not going there, you can add it to your capital under the finance by section. But we are not there yet, so you don't have to worry about that. When we get into some more intricacies about the entire balance sheet, then you will address that. So for now, you can ignore the long-term liabilities, but they can go two parts. You go either up top or the bottom. All right, so fixed assets, current assets, so subtract our current liabilities to get the working capital, remember that. And then the figure we get, we add that to it should be balanced with the finance by section. So in the capital, finance by section, capital, net profit, which we worked out in our last video. I'm going to attach the link at the end of this video so you can go back to that video. And with the drawings, there are no long-term liabilities. So, all right, let's get to work. All right. Pull up the question. All right, so here we go. Remember, the first thing to get your marks, you want to ensure that you place the name of the account, G Brown's balance sheet as at the 31st of December, 2023. Of course, it is possible you could use the name statement of financial position. It's the same thing. All right. All right, so let's go. So we know that everything up here, from stock to general expenses, actually go, we mentioned that they actually go into the TPNL. So for the balance sheet, we need our assets or liabilities and our capital. So we have our assets here. Right? Those are our assets. And we have liability here, creditors, only one. Okay. And our capital, we have the capital figure there. And we have drawings, which will take from the capital because the owner took money for personal use. And the net profit, which we worked out in the prior video, which, as I said, I'll attach it at the end so you can always go back. All right, we have to make adjustment in that. So let's go now. So quickly. First thing, fixed assets. All right. So fixed assets is the first thing. And we want to always use the order of permanence. That means which items will stay in the business the longest. Right, and there are three. We have premises, motor vehicle, fixtures, and fittings. So normally, premises will be the business for the longest time, because that's where all the work go out, right? Is carried out. Then we have motor vehicles and fixtures and fittings. Normally, we can put fixtures and fittings first, and then we put motor vehicles. Some business tend to change their motor vehicles every 3 years or 5 years, pending. All right, I might not spell the motor vehicles correctly. All right, let's go. So the premises, let's just put the total right here. So since it's just two columns, just go over here and write them. Because it's a simplified balance sheet. So it is was $92,000. The fixtures and fittings, 1,900. And the motor vehicle was 13,400. All right. All right. And then when we compute that, all those three, we should get 107,300. All right. And this is our total fixed assets. Now we go on to the second part, current assets. And we have some here. So of course, let us not forget our footnotes. The stock that we use in the balance sheet is not the opening stock. So you will not use the opening stock. You'll always use the closing stock, right? The last date, not the first date, all right? Because we have to value our assets, we're valuing our business. So stock or inventory, all right? And the inventory was 44,780. And we have what else? We have debtors. So we have account receivables or debtors, all right? So it's the same thing, whichever word you rather to use. All right, and the accounts receivable or the debtors was 42,560. We have bank. Yes, we have bank. So we put bank there. Bank was 5,106. All right, and now we're going to compute these. So when we compute these three, our total should be 92,446. And that is our total current assets. Okay. The next thing is current liabilities. And we know the accounting equation. The accounting equation says assets is equal to capital plus liability. But at this stage, you know that the balance sheet, the statement of financial position, we're going to have capital equal to assets minus liability. And I'll come back to this. So remember, this is what we're working with now. So therefore, we want to ensure that whatever is at the top up here comes back to our capital figure. All right, so let's go. So to subtract now. So it's going to be less current liabilities. There's only one. So for our English teachers, less current liability. I wouldn't mark it down if you put less current liabilities though. Right? So creditors, there's only one, and it's creditor. And the creditor was, we use bracket for subtraction, 31,600. All right. The answer we get for this, we put it in the next column, which is the next column, next row. So next column, next row would be right here. So the answer we get, we put it here. Next column, next row, 60,846. That's what I got. And this is called our working capital. Another name for our working capital is our net current assets. And that makes perfect sense because you're taking away your current liabilities from your current assets. So it's your net current assets. Let me just bring this column back out for the purposes of it looking good. All right, good. And we go on. So now we want to get to our total. So this now should be equal to this right here. We add them up to get the total down here. All right, we want them to be equal with the capital that we're going to work out. So let's see if we get it balanced. When I add these, I got 168, 146. Let me know if you got the same thing here. And then this we are going to double line. All right, so let me double line this here. Double line. Okay. All right, let's move on. So now we're going on to our finance by section. We have no long-term liability. So finance by, and of course, the business is always financed by capital. Okay? And the capital figure, 68,843. All right, I have 65, 68,843. All right, I now want to, did we make any profit? Now, from the question we did, yes, we did make a profit. I don't have, I want to put it like that. I don't have that one here now. Let me check if I have that on my desktop. Check if it's on the desktop. I'm not finding it. But the total that we got was 121,303. So just check my last video. As I said, I'll put it right at the end so you can always go back. And this is our net profit. So we add net profit. And of course, we have to less our drawings. So less drawings. This would, of course, if you put money in your business, they're going to take back out some. Of course, you're going to reduce your capital. So you have to subtract the drawings. And the drawings amount was $22,000. So we put $22,000 in brackets. And when I computed that, I got back 168, 146. And this means the balance sheet is balanced. So we have to double line. So there we go. And that's how we do the balance sheet. Pretty simple and straightforward. And remember, I mentioned to you that it will be that capital is equal to assets minus liability. And that's the reason why we subtracted our current liability from our assets there. So it comes back to that. All right. So pretty straightforward. And I will put videos for the TP&L and the trial balance that we did at the end. I hope you all understood. Blessings.